Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting the lab today. We got a lot going on. Um, Currently, we have a target below, not a trade recommendation, around 05-ish. And I will show you these on the chart. These are not trade recommendations. These are specifically based on the auction. Um, this stream is about integrating Bookmap order flow tools with auction market theory using a tool called the volume profile in the intraday developing time frame. The Trader Lab is a group of like-minded traders that have come together to really understand and develop trade plans to participate with the idea of creating a career in the business of trading. The work involved to become a high tier or high level participant in a competitive random environment requires shall we say, a lot of dedication, work, and wear and tear. It's just the nature of the business. And the Trader Lab is all about helping traders explore those possibilities. My personal belief is anyone who does the work and learn how to trade, whether or not someone can trade, requires really developing not only the processes, but understanding this business is a gaming business. Gaming like a probability-based business, not a predictive business. And it's a big differential, in spite of what you might think it is not a small thing, about why the market does what it does. And the thing is, if you can accept we're in a random environment, and if you sit here every day watching the market, you certainly might determine it is random. Or you might think your job is to predict what's going to happen. Suppose we don't put our energy at predicting what will happen. How about we define the possibilities? And then when we recognize specific conditions that have been predefined, that we then attempt to get in alignment with it. And then when we attempt to get in alignment, we have structured trades that may help us participate in the market. And then, like everything, the outcome is random. This is how casinos have built their business. It is a successful business model. So instead of trying to come up with something or make a new wheel, why don't we just drive in a track that's proven? And then it's a matter of what we do to replicate successful processes, only participate when we have a statistical edge, the same as the casinos do. They only play games that have an edge. And then over time, in a random environment like ours is, extract dollars because they are playing games that have a statistical edge. And that is the connection to us, of course, is our structured trades or setups. So currently the market is in a short condition. We are currently short. Now, of course, not trade recommendations. We'll go into what happened. We were long this morning. So, it's kind of the nature of the beastie. But there's something very basic. And I always suggest to traders to write this down. And it seems simple, and trading doesn't have to be complicated. It is random. That creates complexity in our emotional responses. The market goes up, write this down, to go down. And the market goes down to go up. I know. What did it do day before yesterday? The market went down, trapped the sellers. What did the market do yesterday? FOMC day. The market went up. What did the market do today? It went up first, and now it's going down. The market goes up to go down. The market goes down to go up. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room. I am minding a trade at the moment, so I'm a little distracted. So almost there. One moment, please. By the way, if you're in YouTube, thanks for visiting today. There is a link in the bottom of YouTube if what you see is helpful here. The Trader Lab is a no-cost community. It's available to everyone. You can take advantage of the Trader Lab. And the lab is really a group of like-minded traders who come together to leverage their collective experience. There's no holy grail, no one way to trade. Wouldn't it be nice, right? Doesn't exist. So we can accept what the market is, not what we want to make it into. We might have an opportunity to actually participate and maybe have a different viewpoint than most retail traders do. And a different viewpoint, subject to your work and your work ethic and dealing with all the things we have to accomplish, may differentiate your outcome from the massive retail traders who do not have longevity in this business. So, shall we? Now, I posted in Trader Lab this morning. Now, this morning, the idea this morning was for continuation to the long side. So I'm going to show you the first trade. Now, RTH open is 8:30. I'm not going to pull the chat up to show you the post. By the way, the target is 55.0575 for me on the short here. And I just have to keep an eye because I will very happily get out a little bit ahead of it so I can focus here. So, and that short's from pretty high up. And this is Trader Lab. And let me just show you these levels, just so you know why the target is, where is it? This is on the chart. Hasn't quite touched it yet, but that was the target. So I'm just showing you the target. Now, let me get I have something else I got to do here. 1 second, guys. I got to get some of those little lines off just for the moment so they don't distract us. I typically don't trade when I'm going to stream because I'm not a good multitasker. But this trade's been on for quite a while, the shorts, and with ads and scales and a lot of stuff like that. So I think my first long, hold on, I'm going to look here. I have to show you the long, and I always like, when I take trades other than, I take different trades, of course. I got to find this one for you. Hold on, I got to look at my stats. Where to go? Because I think it's kind of important that you can see the structure and the triggers. It was at 15 seconds. Yeah, 15 seconds in. So that's a little, but the reason I could activate early is because of what happened right here. So this is the RTH open. So I posted in Trader Lab that I was seeing along right before the open, and it was here. I think it was there. Yeah, like right in here, I think it was. Let me just try to look a little further here. Yeah, I think that was it. Yeah, right here. This here. So this break high in this test against this. Now this is a stop sweep. We have sellers in here, the delta bubble, right in here, are trapped and swept. So the book is swept. Right here was a high volume node. You can ignore this yellow line for the moment. So I posted this. Now my long, and this is luck, by the way, nobody knows anything, right? Was at 55.70, 775. So I got long here. 15, yeah, right in here. So it's like here. Now, nobody knows. When I put this trade on, I'm going to show you now the microstructure for this. Now, there's two ways to do, well, there's many ways to do this. There's no right way. You see this down here? There's nothing going on here. The sellers are here. They are absorbed. So that's the first piece. This is order flow. And again, this is before the RTH open. Okay, I should say it's a hair before the RTH open. So I have support here. So I get my buyers. I get my volume point of control here. There's my target there. So that's our target in the profile world. Hold on. You just heard it go off probably. And I exited just before it. Just don't mess with this stuff when I'm streaming. Hold on, guys. I'm sorry. Now, there's more targets below this, but I'm going to try to take this one step at a time. By the way, if you have questions, please post them. If you're finding this interesting, a thumb up in the bottom of YouTube. Um, this is auction market theory, and we're using a volume profile and Bookmap order flow tool for the tip of the spear is what I call it. This is not a trade calling room, but I believe anyone can learn to trade. Now, what I believe doesn't mean anything, but it is what I believe. So 8:30 and 15 seconds, that's where I got long. So right here is your micro high volume structure. I always do this in Trader Lab and here in the stream. I'm not going to spend a lot of time with drawing these lines, which I do. I'm going to try to get more into the broad strokes. I got a little flipped around here this morning, and that happens to me in transitions. I flipped around, I took a few stops. That doesn't bother me. I mean, psychologically, it annoys me, but it's just part of the trying to get positioned in the market. So I'm always like you. I'm emotionally triggered, disappointment, anger, frustration. You get one ticked on something, or your scales missed by a tick, that kind of thing. We all go through that, but it doesn't mean you're not going to have emotions about it. We have another target at 5,500-ish, not a recommendation. Everything is just sort of, I always say, horseshoes and hand grenades, because there's no precision in trade. So this is too low. So I get my RTH open here. Test of this, pull back here. I see my buyers. Okay, so I'm long like here or wherever it was. It's here. See this 78. So these are Trader Lab structured trades right here. VPOC migration. This is a long. The first target would be the overnight volume point of control. Now there's a couple of things. This is a statistic right here, and this is the RTH open. So right here, we hit a high probability statistic. These are available to everyone in the Bookmap Discord Trader Lab. I'm not going to give you the probabilities, except they're pretty high. This is a statistical target here. This is a structured trade in the Trader Lab. It is right here. This is a developing volume point of control. Market breaks high, pulls back, two-sided trade right here. High probability statistic. And remember why the long against this volume. And you can see it there. Now the next way in it. So what do we have here? Two-sided trade with support. So right here, it's a suspect. Now, the only reason I got in where I got in, number one, it's extreme luck. And I waited until it was 15 seconds. So it was right in here. Okay, and I got in it right here, actually. And I always consider this extreme luck. Here's the other location. Here. And you're going for this. VPOC migration, structured trade, long. You still got to deal with this, but we're in a market that's going up, right? Theoretically speaking. So at this point, it's longs only. So let's watch the behavior. This is too low. I'm going to mark it, variable high volume node. This is process, guys. Now, there's no magic. The only thing that there is if you don't understand this process, then it's going to be like, what's going on, of course. But what the auction is based on is participant behavior. In other words, all your indicators and all the stuff you throw against the wall, I call them spaghetti, and so do others, is taking price and some derivative of price or delta or something and trying to have it translate what's going on. That's all an indicator is. So I just don't use them. But I do is instead of having the indicator translate the behavior, I'm reading the behavior. It's the only difference, except I'm in real time and I'm not using lagging look back processes to try to determine what's happening here. So I'm saying using order flow and the auction, I'm getting as close as I can so I can be proactive, not reactive to something that's lagging. It gets me, by the way, stops, overhead and cost of production, part of the business. So everybody does that. But what can I do? Maybe I can get in better with less risk because I'm not waiting for a lagging indicator to cross over someplace. I might be in here with a stop under here or under here. Uh, you see what I'm saying? And if I want to get risk neutral, which is what I always talk about in TraderLab, it's a minimum 2-lot configuration to get the risk off. So the worst that happens is you take a stop and your broker sends you a gift basket. So that's how I operate, and it's never a recommendation, but it is kind of how you might consider when building out a trade plan. So buyers are here. Now we can look at microstructure. This right here, micro high volume, break low. This is your high volume. This is your high volume. And this is where it was right here, too low, right there. And the yellow line is representing high volume. And it's so simple if you think about what it represents. In all time frames and fractals, high volume is like where buyers and sellers come together to do business. You go to the store, you buy a can of tuna for $1, the seller's willing to sell it for $1, you're willing to buy it. It creates retail or high volume. That's what I call retail. So this is the retail price. Now, the thing about it is, if this is the current price, often the market will come back and check previous locations. It's almost like a shopper. If the sellers won't sell you tuna at this price, and the price now is here, but you remember that you could have bought tuna down here, you might go back to the store. Think of them consolidations or stores. Okay, very simple. If it's still too low, you won't be able to buy it there, and then we'll have to move back to where the current price is and maybe someplace else. So RTH open. Here, break high, test the price. Too low. Break high, too low, break high, pull back. Who knows? Your stop would be under here. This is the VWAP in the mid. We all know you can buy the VWAP in the mid if that's in your plan. This is your resistance. Notice the reaction at the micro high volume right here. This is how this thing works. These are fractals. So it's, for me, longs only because I had this as a scale coming up. Reaction is normal. What is this? Overnight volume point of control is the retail price in the ETH. This was basically the price. And if we come down, then we're going to look for too low. And then if we come back up, we're going to look for too high. So this is resistance. If I can't get above this, then, you know. However, market's bullish so far. And what do we have? Yesterday's high. And we have more. We have this, which is a potential target at 94. We have overnight high, a statistically high probability target, and this, which I pointed out yesterday, 56.11. So today, this was my target, primary target for the day. Now, when I say it's mine, it has nothing to do with me. It's based on how the market works. Now, what is a naked volume point of control, you're asking? What is NVPOC? It's the same as this yellow line, except it's where the highest volume was last time we traded up here. And I always think of this just like, as I'm mentioning, shopping. This price was too high. The market went down. And, you know, it did the Acapulco cliff dive. Well, we have the potential, like all good shoppers, and if this price is too high, we have the potential to come back and check it. Is it still too high? Well, we didn't get there. Life in the fast lane, you know? So there's no prediction. There is potential and there is alignment. Now, I will tell you, if I was that streaming, I would be short against the 55.05 because that's a structured trade. I'm not, you know, I'm just mentioning it as a sidebar. Hold on. I got to scroll some stuff around here. One moment, guys. I better turn off my execution. That could be, you know, I have forgotten to turn things off in the heat of battle, then click on a chart and all of a sudden be upside down for a 10 watt. You know, that'll burn your intestinal lining. Anyway, let me get back to this. Sorry about that. Let me look and see if you guys have questions. I'm going to come up for oxygen here. I'm not a multitasker, and I'm glad I don't have a position. By the way, if you're in YouTube and you're finding this interesting, please give a thumb up down at the bottom. Post your questions. I will do my best. I'm just taking a look now to see what's going on. I don't see questions, so I think we're doing okay, right? Hey, please give that thumb up. Okay, so here we are. Variable high volume node, long, 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 and targeting, targeting. Next target here, then the overnight high. Now I want to show you this. Now this is also going to lead into a structured trade. I'm going to label this. I really want to get going here, but I want you to see the process. Now this is what we do all day and derivatives of this in Trader Lab. The idea of Trader Lab is to give you a template and an understanding of market mechanics. There's no holy grail. I wish there was, because I would pay it. I remember when I was starting out, I started trading in 1980. If somebody said to me, and back then, 1980, a dollar actually bought something. What would you pay to learn to trade successfully? 5,000, 10,000? Is there any price you wouldn't pay if you could actually plug and play and have an ATM in the basement? What would you pay for an ATM? I think you'd pay a lot, wouldn't you? So, variable high volume node, I'm going to label it. So what this is, and let me tell you what it says. This is the language of the market. So if you don't use indicators, and I mean you, I mean me, I have to find another way of interpreting behavior. I do it with volume and the auction. 5505, by the way, is an area to observe currently. So we pull back here, variable high volume node, and out here. Now, I'm going to look at order flow also. So I have multiple things at work here. I've got the overnight volume point of control. I've got this level here, which was too low. I have the mid and the VWAP. And if I want to get, and here's the other piece. When I break under here, this shifts up. So this says going higher. When it does the opposite, it says at the moment, this is too high. Remember, shopping experience. And by the way, the 05 is not a trade recommendation. It is a level to observe. Keep an eye on that while you're watching the stream. I know, multitasking. This suggests we're going to go lower. So, and this is because the shoppers in this consolidation wouldn't pay above this guy. So this is absorption. There's the icebergs. Break. And right here, if these sellers are absorbed by these buyers over here, then we can anticipate on this shift a leg up. Okay? Instead, we get the opposite. This suggests lower. So now this is too high. Watch the process. I come back. Right here, I've got to clear this to go higher. So what happens? It doesn't do it. This is now too high. So just watch the behavior. So I'm below here, too high. This shifts down. This is now resistance. This is resistance. This is support. And there's your mid and VWAP. Now we get absorption. We break. I see the buyers. I pull back here. This is resistance. This now is my outside edge. This sets up a potential long. Notice we just checked in the real time 5505. This is auction behavior. Notice where we pull back. Variable high volume node. This is a long. So you got two long opportunities here. These are structured trades. Now, the thing about them is these trades, when you come to Trader Lab, there's 60 PDFs you can download. So this could be a long if it's in your plan. This, because we have this statistic up above us, is open, and the overnight highs, high probability statistic. So everything is, this is longs only at the moment. And the 05 is not a trade recommendation. It's an area to observe on as we're coming back up to it in real time at the moment. So this now is resistance. If you get long here, you scale here. If you get long here, you're going to scale there. And there's the scale. You see it? Now you get the reaction. Your stop is under here. Now we have to clear this. Broke below it. Now support, support. Take off. Next target. Overnight high is next. This one. Now, you could be done with the trade here. And there's another target. Now, this, I was looking for. Now, we had the 9 a.m. report, so I could tell you, I was thinking that after the report, if we got longs, that we would come out the high. This is called the initial balance high. And at 9:30, it becomes, hold on. That's that 5505. So we're at this location, not a recommendation. The 5505 current time frame, current trade, I should say, is an outside edge in an intermediate time frame. It is a potential area to short. It's not a trade recommendation, absolutely, but you guys can if you can multitask, you can keep an eye. Now, the thing about it is, if you get involved here, like anything in trading, you put a stop in and you put a helmet on. If we can stay under this level, then, and I'm definitely not giving you guys recommendations because it's all random, then the low potentially might get tested. And again, all trades need to be managed. So back to this. Hope you're getting something out of this. Give a thumb up, by the way. Thumb up in YouTube, please, on the bottom. Ask questions. So, and don't get mesmerized by the volatility. It's all about location. It's like real estate. So right here, and we have the 9 a.m. report. So this is the target. So I'm done with my long, but I don't know at this point, and I'm looking to get long again. And the report was what I was looking at. And I have this location now here. So I got mid, VWAP, VPOC. And this trade, you'll see what happened here. So I took a long against here, right in here, got long, got scaled, going for this. And I still have time until the 9 a.m. report. So this is called mean reversion. So for me, I got this statistic. I'm thinking and I want to know the logic behind the continuation trade here. This is my target. So until it breaks, as they say, it's not broke. Where does it break? Under here. Because this was the retail price. You can't buy it here anymore. Target, then what? Too high. Break, stops down here, 199, mid VWAP. Retail trader behavior. For me, where's support? Using the auction, it is right there. You see the alignment? This is how the auction works. Now, let's think of it another way. If this, see that short? If I could multitask, I'd just be sitting here on that short because that's a structured trade. Just saying, not a recommendation. Now, talking about the current market, the way I operate, and the way I should say I suggest to Trader Lab participants, and these are, of course, I have to always say it's not a recommendation. You have to vet everything. But in the current market, the short is against 5505-ish, and you can see it. Your job is to get risk neutral, minimum 2-lot configuration. So the worst that happens is you take a stop and you scratch. And now you hold for a test of the low of the day and potential targets below. This is Trader Lab trading. And if you're looking at your chart right now and you're wondering why 5505-ish, there's a trigger right at 5505 to 5505 half, which is exactly the level. Why does it work? It's random, but there's method. And then it's hold and trail. Just saying. Also, I'd be on that trade because that's the one I talked about before we even got there. Okay, so this is a long. It's called mean reversion. The objective is to get here. Then for me, going into the report, so I have a scale, and then it's just a matter of, are we going to take this out? It's a high-risk trade. Now, the smart thing, of course, if there is such a thing, see this? That's the target. So it's this to this, or this scale to this, and then out the top to 16 or what this. So that's how I was playing this trade. Okay. And I understand 9 o'clock could be the end of the planet, not my job. So I got taken out of it here. Okay. No problem. And it is no problem because I was scaled. And I had a few hamburgers in the hopper. Now this becomes too high. And and that's why it was a target from here. This is called mean reversion, outside in trading. Different plan, it's TraderLab. You can get these in TraderLab. There's 60 PDFs if you visit the lab, and there's no cost. You can use the link in the bottom of YouTube if you're inclined. So if you're interested in this process. If you understand how the market works, you would be short, subject to your vetted trade plan from the 55.05 level currently. I want to point that out to you because while I don't call trades, I wanted you to see it. One moment. So, too high. Don't know. VPOC migration. So right here, I'm looking at this, and I have my report right here. So I look at this. Let me show you. And this is where it got a little funky for me because I had support here, support here. I came down here, and I was above the overnight volume point of control. So I took a long in here, and I'm going for this. So long to here. I did not get my scale. I took a stop here. Okay. Now, and I'm okay with that because for me, I was, again, why would I get long here? I was against this. And if it's too low, then I'm looking for retracement to here, the last level that was too high, and then out the top. Okay. And not so much. So, okay. I don't remember where I got short. Can't remember. Hold on. I got to look back. Actually, I'm going to just leave things and try to come back into the shorts here. I got to start looking for my shorts here. That sounds kind of nasty, doesn't it? You're looking for his shorts. Um, and another thing for me is if I am not in position, I get wrapped around the tree. I then have to wait. I just have to wait for a location. Notice how we're coming back to the '05. This is why in the current market you have to scale. That's how we work in TraderLab, or at least I do. I scale so I'm risk neutral, and then I have a trade management process. So in something like this, I get taken out of the trade. You have to vet. So I'm still going for the current low of the day. It's not a recommendation. Let's watch. Trying to find a short here. Oh, okay. Well, I have other shorts in here. I'm going to just kind of go, let me show you some of these. And some of this is a bit advanced, but I'm going to try to take you into it. Let's go back here. This is too low. Remember the first long. Too low. Too low. Too high. Too low. We're going up. We're going up. Okay. Now, so everything's nice. Okay. This is the last area from here. Now, remember, we got the report and I pulled back to here. So this is my last long. Okay. Because again, you know why. Hold on a second here. Okay. The short would be over at the moment in this from the '05, but that '05 short, let me look here. got down to like what, 97, 98. So that's 7 points. I'm okay with that. And actually, there was more than one. I'll try to come back to that later. So anyway, once this happened, I got taken out, so I don't have a trade now. So now it comes here. This is resting liquidity. I see absorption. I see the bounce. What do I have here? This is the retail price from the ETH. It now is too high. What I'm doing is this yellow line is in the developing time frame. If I'm above the ETH high volume or retail price, it is too low. Same concept. I break below it. I come back to it. This now is too high. I got VWAP in mid, and potentially this is too high. Let's look. This is by short. So yeah, I took a stop. Let me know if you can figure out how not to take them, because I'm very interested in that. I'm just saying, this is just trading. I mean, I get frustrated in the sense of I don't like to lose. But what does that have to do with trading? That's emotional triggers. And I talk about this in Trader Lab. How you feel has nothing to do with the business of trading. It has to do with your primal wiring. So, microstructure. This is the important piece, okay? Look where we come. I'm just showing you. So if I break below it, I can come here because this is the current retail price, or I can come here. Now, and I don't know, but right here is micro high volume. You can see it there, right where the line is coming across. So this is like a micro auction. It's the same as this up here in all these VHVNs, but is a fractal. So it's micro, but you can see the structure. Look where the high volume is, 70, whatever, 78, 79. Here, I get my trigger. I get my pullback. This is where the buyers got absorbed and the sellers took over. This is the order flow. I break, so I have a trigger. I pull back. This is a short. My stop is up here. And there's your test. And I will tell you, when this kind of stuff happens, my teeth chatter, because I'll tell you what goes through my mind. And it's very important, because what goes through my mind goes through your mind. I'm going to get stopped out. Now, I used to, in my developing, as like all of us in my career as a developing trader, that the thought would go through my head, I'm going to get stopped out, and I would respond. I would bail out here or here. And then what? Not get stopped out. See? So you are still going to hear the voice in your head. I do. Except I go, I can't do anything about that. I'm going to have to take my stop. And there's that impulse to avoid the danger. It's our primal wiring. Oh, the saber-toothed tiger, get out of here. The saber-toothed tiger is coming for you. He's coming for you. He's coming for you. Yeah, but he didn't get me because I'm there. Because why am I there? Because these buyers were absorbed. Otherwise, this is the delta. And if it's going to go higher, they're going to keep going. If we see the buyers, and it's a combination of buy stops and buy yours, it is what it is. And I get my sellers. Now, just like any good store that we come back to check the price, that's what this is, shopping. I have the potential to check this little store. This is a convenience store. And the volume is right in there, right there, right here. So this is the outside edge. So there's two ways. You can sell it here, stop is here. That's what I did. And then I always say to myself, because hindsight is 100%, is, oh, I should have waited. Really? I don't know. How about it just does this and never comes back here? This is random. Why did it come here and not do this move on this swing? You see. That's the randomness. So hold on a second. A little noisy. So I don't know the answer to those things. And that's part of the random nature. So if I did take a stop, in my mind, I'm going, it's just cost of production and overhead. I'm still going to be looking for shorts. But what was too high? Let's come back here. My stop is above here because if I come through here, then everything's going to be smeared, as they say. So short, 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 short. Now what? Next targets, settlement, naked volume point of control. Again, what's this? Yesterday's highest volume price. Okay? Remember how the shopping experience is. If this was too low when we started, this was a target, right? We come below it. Now it's too high. What's down below? This. What else do we know? Settlement, high probability. This, high probability. Past performance not indicative of future results. You've got to vet these, and the statistics are available in the Trader Lab. What do we do here? Let's watch. And by the way, what else do we know? Yesterday's low. What's under yesterday's low? If the market is short, remember what I say at the top of the stream. Market goes up to go down. Market goes down to go up. Market goes up to go down. Market goes down to go up. What do? Past 2 days, market went up. What now? Goes up to go down. Why? There's longs in the market. Where did they put their stops? Here. In the Trader Lab, we know how the market works. We don't know what it'll do. So let's look. Next target. Here. Then helmet. And then 40 is another target. This. Here, let's just look at the structure. So these are just, I've just been hanging out doing the shorts. Now, what I do, and I'm not recommending this, once you can read this, and I have some practice doing this, I started trading in 1980. Not with this process. I've done everything you guys have done. And since I've had more time at it, almost 45 years, I've probably done everything you've done. And then at some point, you just stop doing all that stuff. And I mean, unless you have an edge. The problem I found, so this is resistance here. So what do I do here? By the way, where am I short from? Watch this. Pretty interesting. Don't forget, outside edge. The short started here. I break below this, which is the same as that. Different fractal, but same behavior. Too high from the ETH. Now, this was yesterday's retail price. When we come down, it's a target. If we break below it, it sets up a continuation short. So you know where I'm short from, wherever the heck it is. Can't remember anymore. I think up here somewhere. And these are actual trades I take, of course. I take a short here, a continuation trade, and then I'm going for this. Scale into the stops, hold. And where am I going again? Then you're going for this. This was my last trade, which I narrated here. So that was the end of that, I believe. Yes, it is. And it was, in fact, let's look at something else here. So coming down to 55.05 from the top was the target, this, okay? And this is all posted in Trader Lab. So you're in Trader Lab, you know this. Now, remember, if you're in Trader Lab, we're all in the same boat. We don't know what'll happen, how it'll do it. So what I do is while I'm in these things, first of all, I'm going for this because of 1,363 stops. That's why I'm going for it. I know there's sellers sell stops. I want to trade into the stops, you see. So I know the low is a great target. And then it's just this. Then it's my auction-based target is this and this, these two areas. But for me, 05, okay? So 05, and then that trade is finito. Now, this is called VPOC migration. I was still in this trade. There, you see, so this is the target coming down, okay? So that trade's over. So then I stream. But now let's look at the continuation short. Same concept. Now, this is the current retail price. Hold on one second. Now, I also add and scale and, like a tuna on the dock. VPOC 5515. We're now in what's called the mean reversion. This is the current market. I got to adjust some stuff here because I'm trying to keep an eye on what's going on. Normally I can't look at the market, but today's one of those days I want to try to show you what happened and then show you and be able to talk about both elements. So let's think the concept. This is the current retail price. This is in the higher time frame. This and this were targets right here. 5480 is also a target below. We're just going to put that on the docket. Who knows? So this is the current developing retail price. This is a higher time frame retail price. So target coming down, and then if we retrace to it from below, it sets up a short to test the low and, whatever. I mean, this is just the way it is. What do I know? So now let's come back. Now we're going to ignore what's going on currently for the moment. Let's come back to the last short I talked about in the Trader Lab. If I break below this, and it's too high, there's a couple possibilities. One is, I think, let me just make sure where we came down here. I just want to see. Yeah, it was here. Okay. So this is now the retail price. There's a couple possibilities. There's two possibilities in this configuration. You get here, and if we were testing the VPOC from above and we bounced off it, it's the same as testing this from above and turning around and taking a long. But when you break below it, if we pull back to it, it sets up a potential continuation short. So it's the same concept as what you see here. Break, test, south. And then if we do it in a higher time frame or fractal, break, test, south. Okay? So that was the basis of a short here. And that's what I was mentioning while we were chugging along. Micro high volume right there. This is, now I'm in a fractal right here. Sellers are below here. Okay, that's my location. So I have a potential short here or here. But the short, I believe I narrated this right at the top of the stream. I don't remember where it was. You guys might. I just don't remember. I believe it was here. Was it short here? I can't remember. You'll have to help me because I don't remember what time it was. But it was early on. And then you get your rotation. Actually, no, that's not correct because the low was already in, I think. Yes. So it was a pullback because we're targeting the low and then continuation. Okay. So I was looking at this. Let's just look at the structure. So you got this here, that little node right there. I'm going to put the little line. You see it? Let's just see if there's alignment. I don't think that was it. Was it? Oh, it was here. Okay. That makes sense. There's the location. There's the location. I'm in fractals. Think Russian dolls, multiple time frames as you think of them. This sets up the short. Here, there's the trigger. So you have that, see it? Here. All this is in alignment. Trigger, you have a short, your stop is here, and then you get risk neutral. That's job number one. We know this is too low down here. Why? It's the same concept. And ignore this thing. This is a algo. If that's too high and I break away, now this, and there's absorption here, this might be too low. So it's the low of the day. So I know if I take a short in here, that this is support. That's why the low of the day or ahead of it is a target. So my first job is to get risk neutral. I see we have another short just set up. Interesting. Remember, this is your resistance. And you get your rotation, you'd be scaled. Your stop is here, right? And you get taken out. That's life in the fast lane. So this sets up another trade. Now, this is called mean reversion. This is the mean. So now the context has shifted from directional to rotational. And what the market tends to do is it can do two things here. Of course, it could do anything. It can come here and, oh, it's still too high. And what I was doing with the short against here was the same trade, too high and then down. Well, now we come back to the next fractal and I see buyers and absorption here. This is absorption, selling icebergs. It sets up a potential short, and all you're trying to do is get risk neutral. Now we know where the buyers were is here, this volume, and then we also had buyers here. So there's a few ways to do this. You got to look at where the last buyers were. So this is support here. This is resistance. Then we have this here. What I look at is the chop, which is an auction or consolidation. If I find my buyers, and you'll notice we come back and test, this is if I'm managing a long, which I wouldn't be here, my stop needs to be under the last place where the sellers failed, which is there. So the pullback here would be to here. Let's look at the opposite situation. If this becomes too high, it's the same as this, and it's the same as this. This is just a higher time frame. If I see my absorption here, now I have to be looking at this, and I need to be looking at this because I had my buyers above it, and I have my support down below. This is a Trader Lab short if it's vetted in part of your plan. And why would I be doing this? Because that's the same trade from here, except this is a higher time frame. This is the developing time frame. And all we might do, now let me explain. All this might do is come out and then come back here. If it doesn't, then it's the same trade as this from a different location. Remember the short here? Going for this. If I push through here, what's my next location? This. Going for what? Going for this. And trade management. Does that make sense, guys? And please post your questions. I'm looking up, I'm breathing, and I'm coming up for oxygen. And please give a thumb up if you're in YouTube. So this is trading the auction. This is based on auction market theory, using a volume profile and a high-tier order flow tool like Bookmap. No indicators for me. Doesn't mean you can't. I'm just talking about me. I found... you know what's so interesting? We do indicators in multiple time frames. I mean, I understand. We all have, and many of us probably, I'm sure, do. And the point is, when you have conflict, you can't measure anything. One, you get paralysis, let me say that. And if you have random inputs, you've got nothing because you don't know what part of it is working. And if it's random, the casinos don't make the games up as they go, and they don't play blackjack with a variation between 5 and 10 cards. It's 7, right? Shuffle the deck, cut it how many times? It's exactly the same. The cards coming out of the deck are random, and the way the gamblers play the cards is random. But the process or the structured game, or for us, structured trades, is always the same. In the Trader Lab, it's about developing an understanding of market mechanics, the randomness, just like the casinos operate in, and following the plan. If you get in and you take a stop, you're going to need to realign your mind to what the business is. Casinos pay the gamblers. They don't change the game if somebody walks out with a suitcase with $100,000 in cash, right? Because every business has overhead and cost of production. If you took the short and you didn't get risk neutral, you would take a stop here. If you took the short instead here, it's the same trade in a different fractal. And there's your, right here, you see it. Retail, remember shopping. And what is this? Buyer. What happens to this buyer? Sellers, absorption. They were absorbed. Now, the thing with absorption is, if we don't continue absorbing the sellers, then the sellers overpowered the buyers. There's your rotation. This is your micro high volume structure. I'm just going to throw a little line on here so you can see it. And then I'm going to get rid of the line, but I want you to see the structure. Now, these are all trades I take, win, lose, draw, beat myself with with something. It's just trading. And I'm always Always apprehensive and fearful. Why? Does anybody ever tell you that? I tell you why I tell you that. It's called the straight oil from the can. And this is how you are going to feel unless you've had a lobotomy. So right here is high volume. I see my break. So right here, I see my absorption. So this, I'm clueless right in here, except I'm seeing absorption and I have a location. So I'm in the clueless zone. I see a seller here. So right here, the antenna is up right in here. And I'm going, and this is actually how my head is. It's going, is that it? Is this? I see nothing here. I see another seller here. Now I have a trigger. Now the volume is in here. So let's just watch how it behaves. You see this here? There's your break. Now we come back. Here's the volume. This is an outside edge. I'm just going to try to draw it for you. Now, the whole thing with anything you do in trading, first of all, the volume is like, well, it's right there. So, but let me make sure I got this lined up. I'm going to draw this for you. So I don't know anything until hindsight. So, forgive me, because I don't know anything and I can prove it. But this is right here is a micro distribution, and it's this. This is a consolidation. Now I can actually draw that here. I'm just going to put another little line. I just want to show you what I'm looking at so you can see it. So what I have here is this volume. So absorption, clueless. Seller, clueless. Buyer, clueless. Break low. I'm now outside of the consolidation. Buyer here. Where's my resistance? It's here, here. So this is a short. My stop is here. Then I've got to look over here and see where my buyers were. They were here. They were here. And I've got this to think about. So that's the last short. I wish I was on it. Any questions? Can you see them? And then the previous low, right? So this becomes a scale, and then it's trade management and whatever you want to do with this thing. Let's go take a look. Well, this is on the hit parade, not a recommendation. And then it's just trade management, guys. I can't predict anything. I truly am clueless. What I do is try to remember I said, what is the Trader Lab? How the market works, why it does what it does, and how you might get in alignment with it. I can't, prediction's not in my my skill set, but understanding how the market works is. So the market is going to transition, in different behaviors. And all I can try to do, and what we do in Trader Lab, is try to get in alignment. So the thing about alignment is, before the market gets somewhere that you're going to look for behavior or a trigger. So what we have is understanding how the market works in different time frames, So this is an intermediate time frame. This is the developing daily time frame. The behavior's the same. They're fractals. So that's why this was a target coming down. And when we retraced to it, it was a short. Now the short got 6-7 points or something, got a scale, and then it was a scratch. The next level, which is the same conceptually as this in a different time frame, is here. It's the same trade in a fractal. So it's the same trade. And then where are we going? From here to here, because we came back above it. So then this now becomes too high. This is too low. It's a scale. If I get below it, then it's trade management, and who knows? Then it's, I don't know, because it's not my job. What is resistance? This. If I come back through that, then I'm coming back here. It's called mean reversion. It's rotational trade. So far, we haven't gotten above this. So I'm going to look at this again, and let's just see what it does. Not trade recommendations. Let's watch. Questions? please post them. If you're in YouTube, please give a thumb up down at the bottom if you're in YouTube. There's also a link in the bottom of YouTube if you want to visit the Bookmap Discard Trader Lab community. It's a community of like-minded traders who've come together to build out the business of trading. There's a library of webinars that are posted in there, statistics, and of course structured trades that are, there's 60 PDFs of these trades. Now, the thing about it is I'm not a vendor. There's no course specifically. It is a community that has come together to leverage their experience. There's a lot of work to be in the business of trading. So it's a community effort so we all get better. And if you ever think that you're going to, quote, be there is no there. It's a continual effort to improve. Every day I am looking to improve, and because I can do better. And if it means shaving one tick off over thousands of trades, I can tell you, and if you're in a career, there'll be thousands and thousands of trades. That becomes substantial. So, and I still take stops, of course. That's just cost and overhead costs of production. And I occasionally make errors. I still do that because I'm still subject to all the emotional stimulus. I understand the emotional stimulus. I still get sometimes caught, by that momentary lapse in consciousness where that other hand grabs the mouse and does something. It's like, who did that? Have you ever had that thought? I'll tell you who did it. It's who I call Hyde, Jekyll and Hyde. Hyde is the primal wiring, call it the reptilian brain, that, and by, let's just call it, what do they call that? Selective, can't remember, but survival. And the guys, through the selection process of survival, learned how to stay away from whatever was eating them, whether it's a saber-toothed tiger or if you crawled out of the swamp as a worm, a bird. Whatever it is, the natural selection determined who succeeded, and the species developed and procreated, right? So let's just say, for those that worked, here we are today. And the intelligence and the consciousness and all the other things that make up our intellect are overlaid on that part of the brain. That part of the brain is on autopilot. Your consciousness cannot interfere or stop those responses. And that's what creates the emotional stimulus that makes you do things that are not in your best interest in this business. Notice what is too high. It is there. I'm back under here. So this is the last short. Now here's a couple of things. Where's the volume in here? It's here. Where did we come out? Here. Where are we under? Here. The short from here is scaled against this, which would be coming down over here. Now you're hanging out. Or you're out of the trade, subject to your trade plan. This is how we trade at Trader Lab. I'm not saying, all I'm saying is it might be something you might want to check out. I have found in trading, and I've done a lot over the years, as you guys know about me. In fact, if you don't, and it's not about me, it's about an experience. I think, I started in 1980. I was a fund manager. I built trading systems. I shared an office with George Lane. He actually created stochastics. So this is back in the Stone Age. We didn't have computers. We didn't have an internet. We nada. You wanted to learn trading, you bought a book, or you paid a horrendous amount of money to go to a seminar. I did all of that. I went to seminars. You'd fly into a city, put yourself up in a hotel, this kind of stuff. And then I'd leave and go, and I got nothing useful out of it. The books were really interesting. I got nothing really out of them. It didn't teach me how to trade. And I kept looking for something. And then, and while we're waiting here, I don't have anything other than the short that's sitting here. And post your questions. While I was waiting, the first thing I did, which I didn't mention to you, if you're new to the stream, early on, 1980, I took a course at the CME in classical bar charting. We didn't have candles back then. It was open, high, low, close bar. So we're still on the shorts here, okay? And so, measured moves, head and shoulders, pick one, flags, pennants, all that jazz. So I said, okay, it's all predictive. This is all great. Look how often these things work. So I set out with the belief that trading was prediction. So everything I did up to that starting out was about predicting what was going to happen. Yeah, the high's going to be here. It's going to go there. If we get this structure, here's the measured move, blah, blah. So my beliefs, and this is very important, my beliefs were built on top of a predictive model. So everything I did from then forward for a number of years was trying to have predictability and accuracy. And a lot of that is built on not only beliefs, but the subliminal need to avoid the saber-toothed tiger, the pain, you know, all that. So if we can predict, we're going to, quote, have more confidence, have more winning trade, right? Of course. But what is the motivator? I don't want to lose. Risk aversion, fear of the saber-toothed tiger. Our primal wiring is always operating under the hood. You may not have consciousness, but your decisions are being shaped by this primal wiring. And it works well in many environments, like out on the planet. When you come to the trading world, you're no longer in that world. But our socialization, our life experiences are all wrapped around these behaviors that serve us well for survival. You know, work good out on the tundra with a saber-toothed tiger. It works pretty well out on the planet with the, you know, interacting with the rest of the folks. You know, don't step in front of the bus, or if you do, you're not thinking about whether you should get out from in front of the bus. There's another process that kicks in and you automatically jump out. There's no time to process it. That's what I'm talking about. This business doesn't operate that way. So I had to change my thinking and look into what I believed. And I figured out that I had a defective process. What was defective was my beliefs, because I was shaping everything I did around a belief that was not aligned with this business. I'm in a gaming business. I didn't understand gaming. Never thought of it. And all my buddies were floor traders. They thought I was out of my mind. There were very few off-floor traders. I didn't know any when I started. And when I started in the business, the objective was for me to get a membership. So that's all I was thinking about. I wasn't, you know, and I thought, okay, I now understand charting. And back then, you would do it with a ruler and a pencil, and they give you a chart book every week. And then you'd add every day. You'd put an open, high, low, close, draw your little trend line. That's how I started. I still got my ruler. I'm just giving you a little background because what kept me, and then when I got into trading systems, I thought that would solve it. Because, oh, I can optimize now. Yeah, I did that. And that's curve fitting. You guys do the same thing with your indicators. It's the same thing I did. I just did it on steroids. And my first computer was an Apple IIe. George Lane had an Apple I, you know, so I had the high tech. And then I'm trying to remember, a 286 came out, IBM, the 286, then maybe a 386. So I got a 286, and then I started writing systems on a 286 DOS. Anyway, not important. So I'm just saying is I've gone, and I've done all this Elliott wave, Fibonacci, you know, doesn't matter. Extensions, retracements, blah, blah, pivots. I can't even remember because I choose not to. It's just a waste of time. And I had so many aha moments that then failed. And the problem was there's random success even if you throw a dart at the board. And if you see throwing darts as winning trades, you're going to try to get more accurate with your dart. But that doesn't create an edge because it's random. Boy, that short was really nice. So I don't have any additional trades here, just the one I narrated up here. You know, that's it. And then under here is the same trade. See this? This is the same trade that we were talking about wherever it was. Here. So this is the short, scale, taken out. This is the short, down to here, scale, break, pull back, add, or nothing. You see the trades, guys? And I don't call trades. I'm just trying to give you a sense of market mechanics. How does the market work? Why does it do what it does? How we doing in YouTube? You guys following? You getting something out of this? Give a thumb up in the bottom of YouTube. By the way, if you're interested in Trader Lab, there's a link in the bottom of YouTube. You can click that. It doesn't cost you anything to visit the Trader Lab community. You can download all the resources and go from there. And visit and join the community. It's no cost. And what this stream is about and what the community is, it's built on structured trades. So you can reverse engineer them. And the idea in a trade plan is only trade where you have an edge. Now, when you get this, you got choices. Here is high volume. For breaks here, this is resistance in the higher time frame. Suppose you're managing your trade and you get taken out. It comes here. This is your outside edge. Let's assume we're operating in a fractal. What happens here? I'm below here. I come outside here. I get a trigger. Now I'm taking you into multiple time frames. I'm not suggesting anybody trade like this. I'm just saying this is how you learn to read it. Order flow, buyers, they're absorbed. Sellers take over here. Look right here. See this volume? This is also another entry if it's in your plan. Here's the high volume. Here, there's the seller. That is too high in a fractal. This is too high in a fractal. So this is your fractal. Selling trigger. Pull back here. This is your outside edges up here. Here. So if you take a short here, your stop's going to be here. And then it's risk neutral. There you are. I mean, it's however you want to do it. How about this one? You see this and you're like me, you're a deer in the headlights. You see the trigger here. There's this. It breaks here. Now there's this. You see this break here. There's this. Back to here, back to here. These are all shorts. Put it this way, if it turns into a long, I can't get long because I got to stay short. That's the trend. And where's my target? Remember, 54.80 and then 54.70. So these are areas. So what I do, and I'm not recommending this because I don't get all of it. I get what I get and I go from there. It's all shopping. I'm looking at this, that. Why? It is the same as, this is just to keep you crazy, this, except it's slightly less dominant. So this is high volume. If it's too high, I'm going to come back to the next high volume level. This is intermediate time frame locations here. If I get under here, I got this. So that's why I mentioned these are targets. And again, I don't know. It's not for me to worry about it. I don't think about it. I just put a trade on. I get risk neutral. That's my main concern. Now I bought a ticket to ride. Then I just manage the trade. If I get taken out, I just go, okay. And then I look for another location to re-engage. Or I have structure that suggests something's changing, and then I just put the car in the garage. So here, I had buyers here. So let's just see what happens when we come back up in here. These are not trade recommendations. All we're doing is monitoring the auction. So what you have here is a consolidation. This is the outside edge. This sets up a condition called mean reversion, which is outside in trading. So rotational trading. And it does it in all fractals and time frames. So let's just see what happens. We're going to look at this behavior right here. And there's not a trade recommendation. We're just watching the behavior. I don't call trades. Just remember that. Why don't I call trades? Because I take stops like you do. Why would you want to take my stop? You take your own. You don't need me. Truth, really. I can't call trades because I'll put a trade on and I'll take a stop or I'll put a trade on. And if I read certain behavior, then I'll just hit the eject button and just, if it doesn't meet my qualifications. But this is an area I would like you to observe, not a recommendation. Because the market can do anything. You guys know that. Questions? Please give a thumb up in YouTube if you're visiting. Always appreciate it. This is mean reversion. And what you would be looking for, and these are hard, by the way. In fact, I'm trying to remember. I took somewhere along here, I took two shorts. In other words, the hard part with this kind of trade is where's the outside edge. That's what is the maddening part of mean reversion, because this can look like a short and you get a rotation. You come back to it. They take the stops out here and then push further outside, like you see what's happening. That's the issue with this. So let's just watch it. I take most of my stops, I think. Well, I'm equal opportunity. I take them everywhere. So, but this is a hard trade because of you're trying to identify an outside edge. So let's look. See? Now, the way to think about this, and when I trade this, I'm looking at these levels like this high volume, and then up here, this high volume, then here, this volume right there. You see it there? So this structure right here is your resistance because we had our sellers here. So when I put these trades on, I'm looking at outside edges and I'm looking where it was too high. We also know stops are going to be here. So it's very hard. It's my least, I always say this is my least favorite trade because I take stops in mean reversion because I don't know where the outside edge is. I know now this is outside, so I'm looking to come outside somewhere and come back to here. So we can watch this, and I can never figure it out. So the high volume is here. So that's what's so nasty about it. So what can happen to me in these, I'll take a couple of stops in here. Now, for me, a stop means, well, like here, you put the trade on. It's a couple points. It's not a big deal to me, but it could be a big deal to somebody else. Where's the outside edge? You see. So when you build a trade plan for mean reversion, I always, and I talk about this a lot in Trader Lab, I said, you've got to look. Where's the structure? There's one here. There's one here. And you can't tell. So then you're trying to find triggers and exhaustion. Like this is a trigger here. So coming back, this would be valid short. This is actually a good short. I mean, not good. I mean, it didn't work. But, and you're trying to come back for continuation, and you'd be looking for this. And the next target, which is this. So that's mean reversion, underscoring the word mean. So let's watch this. Any questions, guys? And please give a thumb up on YouTube if you're finding this interesting. And remember, if you're in YouTube, there's a link in the bottom of YouTube if you want to visit the Bookmap Discord Trader Lab community. It is specifically for traders who want to build a business. It's not a trade calling room. I take stops, you'll take stops. I mean, it is what it is. But the thing with this is, over time, and this is how the casinos operate, when you're taking structured trades that have a statistical edge, and the casinos do pay to gamblers, don't forget. What happens at the end of the day? Are you ahead because you follow the plan in spite of the outcome of any specific trade, or are you behind the eight ball? And there are going to be days following a plan that has a statistical edge that you're going to be behind the eight ball. You're going to have a losing day. You should have also a loss limit for the day. If you hit your loss limit, you put a lock on your dome and you don't trade. Go on sim. See how this is operating? This is what is tricky about this kind of trade. So it is an outside in trade. It's just where's the outside? So I hope you can kind of see. Now we had absorption here. This is my support. So what you're trying to do is get scaled, and then we're going here and here. These are our targets and the low. So you can kind of see the structure of this trade. Getting into it using tight stops is pretty hard. Support is here. So we'll see what it does. Questions? How we doing in YouTube and how we doing elsewhere? So this is our support. There was absorption here. These sellers got absorbed. The buyers took over here. This is where you would scale ahead of, let me show you, ahead of this node, because that's the last place where it was too low, right here. So for me, getting short and hopefully getting short or taking a stop, I just put it back on again. I mean, I know I'm not saying you should do this, but if I get in here and I get taken out here, I get another trigger, I test it, it's another short. I'm going, now you have to be okay with that. That might not be your speed. Where's my support? It is here. I have to scale here, you see. So now if I'm short from in here or even here, stop is here, then I'm going for my next area. I have to clear the low of the day, and then I'm going for this. And if I get under there, you can just, these are all on the price map. I'm looking here. Not a recommendation. Is this making sense? No precision in trading. And these are hard. This is a hard trade because it's rotational. So, and is mean reversion trading in the fractal. Does that make sense, guys? Can you see the process? How we doing in YouTube? How we doing in the Bookmap Discord Trade Lab community? You guys getting something out of this? By the way, I do want to mention it, and Stephen, thanks for posting that. Um, one moment. Uh, if you are a Bookmap subscriber, remember there's Bookmap Academy, and all of these services and education are available at no cost. In the Bookmap Academy, you're a Bookmap user, you get coaching, mentoring, from other traders to develop your craft. Trading is nuanced. If you want to be a competitor, you must always strive to be better. So this is our support. Don't forget. There's absorption here again. So this is something you would know. So if you're coming down, your scale has to be ahead of this. So now you come down, you test the low. You don't take out the low, then you're going to come across. So this trade would be over, That's all it is. It's nothing more than that. Mean reversion trading is rotational trading. And part of the joy of mean reversion, and it is mean, is where's the outside edge? You see, where's the outside edge? Was it there? Well, it was here. We come outside. What we know from order flow is right here. It was absorbed. So the buyers were here. These guys were absorbed. What happened up here? The buyers were here now, and you see a green bubble, buy delta. Why didn't it go up? Selling icebergs, they were absorbed. Retail traders have their stops here, and retail traders would have, well, if they got long, who knows, would have their stops here. If I see the sell stops coming out and I have a buying iceberg, now I can get the buy stops coming out, and we'll see if we get more selling icebergs. So that's why in mean reversion, you've got to be scaling the targets. Where's the outside edge? Up here. Where's the outside edge? Guys, I got 5 minutes. Post your questions, and if I can't get to them, come to the Bookmap Discord Trader Lab community. There's a link in the bottom of YouTube. There's a great team in there. We're all working to get better. You'll never stop trying to get better. The first thing to do is survive and build the business. This is a business of trading. Now, what happened here? Very important right here. Why? Sellers absorb these guys. Icebergs. More seller here, another iceberg. What happens here is key. If we break low, then fine. Otherwise, these sellers are getting absorbed, which is the iceberg, by the buyers. Then the buy stops are up here and we can squeeze. Then you have to be looking again outside for mean reversion. Mean reversion. In a downtrend, unless things substantially change, these are the targets. There, got pretty close. And then there. So these are still on the hip parade, not a recommendation because anything can happen. You know, that's the other thing you got to write down, guys. This is not a business of prediction. It's gaming. And we are in an environment. The only thing that's certain in this business is uncertainty. I got a buyer here absorbing the seller. So we might squeeze now. We got to just see. You know, you don't know. Come up in YouTube, and remember there's a link in the bottom of YouTube if you're interested in this business, this process, becoming part of the Bookmap Discord Trader Lab community. There is no cost. There's 60 PDFs. This is what these PDFs look like. I'm not a vendor. I never put these together with the intention, somebody, traders were asking me, what are you doing? How do you do that? Oh, here. Here's a couple explanations. And there's a bunch of stuff in here. Some of it was developmental. I worked with the Bookmap developers on ideas I came up with. Some are integrated now into some of the tools in Bookmap. Others we tossed. It's the nature of experimentation and research. I will always be doing research. It's what this business is about, trying to get better. This is a competitive business. You have to work on getting better. You do not, in my opinion, want to stay stagnant. And if what you have is random, without an edge, what you're going to find is everything works sometimes. That's what keeps us doing things that do not have an edge. We just think if it's another tweak, another tune. I coined a phrase, and there's a webinar I did. It's available to all of you in the Bookmap Discord Trader Lab, and it's called Trader Groundhog Day. I lived Trader Groundhog Day. How many times have you put something together, look back, tweaked this, tuned that, put a conglomeration of whatever together, and it looks great. You go back 6 weeks or whatever it is, and you look at all the big moves you would have caught, right? And then you put it in practice, and even though you might catch a couple of those, over the sample size that you're trading, you're losing. And then you go back and you retune and retweak. What that is called is only curve fitting, and the other part of it is everything works sometimes. That's the Trader Groundhog Day. We think we're onto something. We believe what we're doing is correct, and the beliefs are the actual key component of this, and we'll keep doing it. But even if it doesn't work, we think we just have to make it better. You may find that the random results you get that obviously work at times have absolutely no edge, and the only thing it gives you is a negative edge. Would you keep doing the same thing if you knew statistically it was a losing trade process? I suspect you wouldn't. If you can't measure it, and it isn't by your P&L, you measure it by the inputs that create the output, which is how you measure your edge. Most traders don't approach it that way. In the retail space, I will tell you, professional traders, that is how they approach it. And of course, past performance is never indicative of future results. Please give a thumb up in YouTube on the bottom there on the way out, or click the link and visit the Bookmap Discord Trader Lab. Download the resources, say hi. You do need to confirm your email address in Discord just to make sure you're not a bot. So, believe me, sometimes when I'm trading, I wish I was a bot. So I didn't have the emotional states, which interfere with my intentionality. But if you want to understand how your emotions interfere with your ability to trade, even if you had the Holy Grail locked in the drawer, if you can't manage your emotions, you're probably not going to have longevity. And the thing about emotions, how do you manage emotions? First of all, you understand how they work. The other part is if you have metrics, a vetted trade plan that has statistical probabilities, it gives you tangibility over randomness in a random environment. If it's tangible, you can touch it. If you can touch it, you can look at it. You can see a metric that tells you this trade has a positive expectancy and an edge. I'm going to put aside my emotions, my triggering fear, because the only way I'm going to realize and extract these dollars from the other participants, even though it's random, is by executing my edge. That's what Trader Lab is. That's what it's built on. Give a thumb up on your way out on YouTube. Click that link if you want to visit Trader Lab. And thanks so much for visiting the Trader Lab today. Trade safe. Be sure you have a vetted edge and a trade plan. And I look forward to seeing you all tomorrow. Thanks again, guys. Appreciate your time and interest.